All right, Rob, let's get going. Okay, everybody, welcome to today's webinar. We're just going to look at the data. So I know last time we've talked, we do a lot of these types of sessions, and we talk a lot about the industry, small business banking, what's happening in the market, what's going on. But today we're going to focus more on the data. So yeah, I think with that, we'll kind of just overview the agenda. So I'm going to do a little bit of a market update just because there were some really great things. We hosted an event, a small business banking event last month that we had some really great speakers. And there were a couple of things that were said kind of related to today's conversation. And I just wanted to kind of bring those up just as a framing because I thought they were really interesting. And then Rob and I are going to get into the data. We're actually going to look at some raw numbers and some things that we're seeing. And then at the end, we'll kind of introduce some capabilities that we're building. And then Rob can talk about what his team offers to kind of like help you make progress on this data, which is always good. So it's one thing to see it and hear about it. It's another thing to actually take action on it as well. So joining me today is Rob Heiser. He's the founder of Segment. Rob, can you say hey and introduce yourself?
I'm Rob Heiser. I'm the founder of Segment.
What does Segment do?
We work with a lot of either resellers, banks, credit unions, fintech providers, and really help them make sense and understand of their data, their consumer data, their customers or member data. We do that through both a discipline of research, which is what's called library science. And so we research an enormous amount of transaction descriptions to best understand where the money flow is going, and then we build product around that. So the foundation is really understanding the money movement, and then here's a slide of our products. And so one of the products is called merchant payment cleansing. That's us basically telling you, this particular payment is going to a Target, Walmart, or even Joe's Barbecue down the street. So it's both very descriptive. It's also has categories. We include logos with that. That goes into our customer insight product, which really tells you like exactly what's happening in your customer's life. Are they sending kids to college? Are they travelers? Are they pet lovers? Do they like to play golf? Are they avid golfers or not? We also have an AI modeling platform in which we do a lot of propensity modeling around, home equity lines of credit, if they're going to open that, if they're going to attrit, if they're going to, they need a lending product. And then we have a full automation solution that helps message to customers, and that's integrated with a lot of, online banking, mobile banking providers. And so that's us in less than 20 seconds, which is hard to do.
I love that. No, I mean, the reason I wanted you on, Rob, obviously we've known each other for a while.
Yeah.
But at Autobooks, we get a lot of data. We're starting to get more of it and analyze it. We've got our interpretation, but I kind of wanted to bring you all in as independent entity that works with data all the time, just to see what you're seeing and kind of match things up to see. And we're going to kind of go into some data that you've analyzed kind of related to the topic today, just to pressure test, like the things that we're saying and seeing in market, are you seeing them as well? So that's kind of the main reason to bring you in. So do you have a favorite?
Thanks for having me. I'm excited to do this. I think what's interesting, and some of the insights we're going to talk about today that we've prepared for this, is that there's a lot of opportunity basically right under the nose of everybody out there. They're just not familiar with where to look or what to look for. And I think this today will be enlightening for everybody who's on the session.
Absolutely. Do you have a favorite use case of a bank or credit union using your data to do something interesting?
There's so many. I mean,
what's your favorite, Rob? Come on, man. It's just your favorite.
We'll talk about it today. I think there's a systematic problem in the industry in which, you think about COVID and everybody that have kind of created this side hustle over the last 2 to 3 years, creating businesses, Etsy, Shopify. You see the growth of all this stuff. And what you don't understand is that most people who've never owned a business before, they create all these accounts as consumers, as retail customers, and they're growing, and they just don't really have a relationship with the institution other than they're an account holder. And I think that's a great opportunity for them to, and we'll talk a lot about that in the numbers today, but I think that's a great opportunity just to seize the opportunity they have, which is right in front of them. They have a lot of small businesses they don't even know are actual businesses.
Yeah, cool. Agreed. So for housekeeping, if there's something you want to chime in on, as you can see, Rob and I just want to have a conversation about these items today. If we start talking about something, or you want to dive in or ask a specific question, use the Q&A section of Zoom, if you don't mind, please. It's a little bit easier for us to organize and see those questions, and then supply some answers. If you happen to do it in the chat, that's fine. We'll try to get to it there as well, but please try to use the Q&A if at all possible. So let's give a little bit of a market update, but kind of really focused on, we hosted a small business banking event last month, called Small Business Banking Forward. And it was really an event about the topic of small business banking, not about auto books at all. We brought in, speakers from all over the industry. You can go to smbankingforward.com, so smallbusinessbankingforward.com. And there you can actually, if you've already registered, you're going to get access to all the sessions. You can download all those presentations and see what it's all about. We've had a lot of people requesting those. Those are live up on the site now. You just got to fill out the form and you can get access to all that. But there were a couple of sessions that there were parts of sessions, I will say, that stood out for me related to today's topic. And so, most of you all probably know Ron Shevlin.
Who doesn't love Ron Shevlin? I mean, seriously.
Well, there's a lot of people that don't love Ron Shevlin. Most people know Ron Shevlin. Half, a third of the people love him, third of the people are kind of indifferent, and then the third people probably can't stand him, which is exactly what Ron wants, I'm sure. But yeah, so he had a couple of interesting data points that I just wanted to quickly highlight, and then Rob, if you want to comment on any of these, feel free. But the payment proliferation is causing small businesses headaches, and so this slide right here always strikes a chord with me, because this comes out in a lot of interviews we do with business owners. Quite frankly, it comes in, personally. My sister-in-law runs a photography business. I talk about it all the time. And she's always, basically dealing with this problem right here. And that's, as a small business owner, they are accepting payments from their customers in a lot of different ways today, more so than ever before. And it's causing, a cash flow headache in many cases. And so this is the data that Ron pulled. But Rob, what are you seeing in the data? I mean, any thoughts on this as well?
Well, I mean, I think you've talked a little bit about the P2P stuff has drastically increased in terms of volume. Yeah. I mean, I got my haircut just for this, Derek. So I look good for you. But even my barber, I mean, it's they've turned to Venmo, right? And so they have Venmo, or they have Square. Wow. Dongle. And so it's starting to change the ecosystem in terms of these small businesses, because you no longer check out at the front. You check out with the with the individual proprietor. And I think that's it's a nightmare from a cash flow perspective. It's also a nightmare from an accounting perspective. And think about your taxes that you have to do, and you have all these income flowing in from everywhere. There's a great opportunity, I think, from a technology perspective, to try to aggregate this into an accounting package that makes sense. But I don't think QuickBooks is doing a good job of that at all, in terms of how they're trying to manage all this spend. But we see the same thing. I mean, this is the digital payments, and there's a lot less cash in terms of the movement of money. I think where you see cash is in industries in which it has to use cash, like the CBD and medical marijuana type, and kind of obviously gambling. But the enormous growth in terms of digital payments over the last 2 years has been staggering.
Yeah, amazing. And then okay, so
what's interesting, can you go back to that? 'Cause I think it's an important point, is that you talk about Venmo and Zelle and PayPal. I think a lot of small businesses have adopted that from a payment perspective. It's not just a P2P. You're seeing a lot more of this, P2P being more SMB, which is interesting.
Yeah, agreed. So I mean, Venmo did the release, I think, earlier this year, where they actually ask you what type of transaction it's for, right? Yep. If it's for a business or a personal transaction. So I think they're clearly signaling they're going to apply more effort in the business world for sure. In addition to that, this is interesting, and I think it relates, quite frankly, to the last slide quite a bit. The SMBs that are looking for new banking relationships. Yeah. And not only looking for new banking relationships, and I think that the term really kind of like up here, like what is a banking relationship is going to be largely redefined. And I think that those other providers that you saw on that pie graph are starting to supplant themselves, or like kind of become known as the banking relationship for the business owner as well. So like basically where their funds are primarily stored, access to real-time business debit cards, lending services, things of that nature. I think that this is going to be a very interesting, displacement of customer relationships that we see over time, because people are struggling with this transition from accepting payments in person to now either in-app or online, and that's causing a pretty sea-shift change in relationships.
Well, I think this is where the fintech providers are. You're going to start to see a lot more opportunity. I don't know if you saw the QuickBooks update I think it was earlier this week, in which they've upped their fees, but they're including a checking account.
Right.
So you get a free checking account. They want to, and you get interest on that checking account, depending on your deposit, how much you deposit. So you're going to really start to see more and more kind of niche players that are focused on specific gaps to fill in for these businesses, and then they'll start growing their portfolio to try to win you 100% over. I think that's a big threat on the kind of the small and community banking side, is that if you can't help build that relationship, you're just going to start to lose them through kind of niche things that they can either lend against, if it's
Sure.
an asset for inventory. There's lots of different areas in which small businesses are, banking is at risk from losing and displacing.
Yep. And I think the interesting thing here is, like, especially in this larger category, it's starting to jump up pretty big there. It doesn't surprise me to see that people down here, or in these revenue categories, are a little bit more transient, but I think this is a clear signal that businesses they're struggling a little bit, and they're looking for different options out there, and they're much more willing to shop than ever before.
Yeah, that's right.
So then Sean Dillon, I mean, these kind of next slides are like going to tee us up right into the conversation when we look at the data. So he's the Chief Product Officer for First American by Deluxe. First American is a payment merchant system that was acquired by Deluxe earlier this year. And, he kind of went through this story, and he said, kind of the classic banker conversation that we have is, hey, my customers aren't using Square. They're out riding on a tractor. So that's kind of the banker's comment. That's actually a direct banking comment that he heard from a banker. And then he's like, kind of classic sales guy. So he's probably taking a shot at me here. All of your customers are using Square. So that's what they're saying. And he said, really, we just started to pressure test that. And we wanted to kind of dive in and look at the details to see which of those things are true. And this is very interesting. This is what they found. So basically analyzed 3 financial institutions, a $3 billion asset bank in Texas, a $1 billion asset bank in Pennsylvania, and a greater than $10 billion asset bank in Oklahoma. These are the number of locations for each, the number of commercial DDAs that they measured. They didn't even get into the consumer DDAs here. These were all commercial DDAs analyzed. What they found, I think, just kind of tells the story. So the banks were servicing, this bank was servicing less than 2% of the DDAs of their merchant account. So of the 10,500, the bank's merchant program was installed in less than 2% of those accounts. Fintech providers had attached themselves to greater than 30% of those accounts. So think Intuit, Square, Stripe, PayPal, others. Greater than 30% of those DDA accounts had, basically a fintech service attached. Same thing with FI number 2, and then even more so here with FI number 3. And so then
even with the best penetration out of the 3, 40%.
Yeah, that's right. That's right. Yeah. It's crazy. But here's the reality though. Here's like the brass tacks. That bank earned $156,000 that year off of their merchant program. Nothing to sneeze at. But at the same time, if you took the attachment of the fintech services and the volume going through those providers and you monetized it at the same rate, what Sean was saying is the bank's revenue upside opportunity for winning those relationships back is $5.9 million a year. For financial institution number 2, $1 million. And then for this last one, $28 million a year in revenue opportunity just on the merchant spend side, right? Monetizing and helping that merchant accept payments through the financial institution. And
that is just commercial DDAs. It goes back
just commercial DDA. Yeah. So I don't know if anybody out there thinks that that's pretty eye-opening. If you've got a question or a comment there, would love to see it. For me, when Sean showed that slide, I about fell out of my chair, because we talk about this, quite frankly. We kind of see the movie playing out with industry news, but to actually look at the data starts to really kind of bring it into view, and make it very real. So I don't know if anybody on here analyze their own data to this level. Would love to hear from you and see if you've seen similar things from doing it yourself, if you don't mind. Okay, so this kind of hits to this, right? We talk about this a lot. Sellent did a report earlier this year, Sellent with Oliver Wyman, and they basically just said, hey, Square is the thing. Like, they're the competitor. They're coming after banking. And then when you look at what they offer between merchant acquiring, software services, merchant cash advances, and card, transaction processing, what this equates to, this is kind of how they make their money, right? 45% off merchant acquiring, 6% off of providing card services, 14% off lending, and 35% off their software fees. That competes with 80% of the revenue opportunity or potential that you're also looking at targeting for those same customers. The way you do your split as a financial institution is a bit different. You're primarily looking at this card spend, basically interchange created by businesses swiping their card, your checking fees, merchant acquisition, and credit lines. The other things that you offer, kind of Square doesn't compete against yet. So this is how that starts to play out. So that's the real threat. That's what's going on. That's what we want to kind of like dive into the data and look at today. This was also interesting. So Sean got in, kind of the last thing was he was looking at Square's Q2 shareholder report and really breaking it down. So this was, just some of the data points he pulled out here. I thought this one was very, very interesting. When surveyed in the 2020 survey of 2,200 sellers conducted by Square, they found that for 50% of those users, or those customers, their debit card was the first business debit card that individual had. I think that's interesting because I think all of those individuals had a debit card with a financial institution at some point, probably personal. When they moved to Square and they got into the flywheel from Square, all of a sudden they're starting to attach and download and use the debit card service provided by Square. So they're really good at upselling and cross-selling products and services, which I think is very, very interesting. And then this last piece down here, really just kind of like sums everything up, if you will. So Square provides processing for more merchant outlets, so more merchant endpoints than Chase, Wells, Bank of America, Citibank, and PNC all combined, according to Nielsen, and that's in March of 2020. That's not even after the full ramification impact of COVID and people having to rush into, kind of like digital providers to accept payments. So, they're coming. They're not only coming, they're here. And this is a big problem. And when we start to show the data for you all at community banking level, I think you'll see that.
Well, and I think this is, this particular quote, I think is the risk to the community banking levels, because Chase, Wells, Bank of America, Citi, PNC, they're focused kind of mostly up market, not so much down market like Square is, where the community banks are focused more, in that small, medium-sized business from the payment perspective. And so you're not going to get typically you're not going to get a Walmart processing at a community bank. And so even though these are the outlets, the volume, obviously their volume is going to be much bigger because it's a lot more throughput on some of these large payment processors, especially Chase.
Yeah.
But the threat is definitely down market.
Yeah, it's down market, and I would argue, I think we're starting to see it too. Square's making their way up market too. We've done webinars on it. Like, you can see them clearly signaling and moving into that kind of medium-sized business now. So it's only a matter of time before they're going to start to like eat, because to your point, hyper focus on these big, large, kind of national chains and things of that nature. But as Square moves up market, it's a big threat to the whole banking industry as a whole.
Well, they had Starbucks, right? When the IPO, they had Starbucks. It was a losing was a losing merchant because they won in volume. Now that they have scale, I think they can they know they can do the scale already from a throughput perspective, because
Yep.
of the Starbucks. Now the question is, from a cost and pricing perspective, will they be competitive against some of these other big providers?
Absolutely. Great point. Great point. Okay, so let's dive in. Let's look at some data. So we've kind of enough banter on that, if you will. So so this is like some data. You tell us about
Yeah.
it, Rob. So like you
So
get access to some data. What are we going to talk about?
so we serve, hundreds of banks and credit unions. We have one institution that allows us to, even though I can't tell you their name, allows us to show some of the insights with some of their data. So this is that institution. And it's important to know is that, one of the things that we see, you'll see that number 32,266. We have a software that allows us to look at all the transactions, and we categorize them based on our taxonomy. And so you'll see on the left-hand side, we call this a KLI equation. So it's basically a correlation or something that you can do, kind of click and create your own audience per se. And just with their audience, I wanted to show an example of that systemic problem within the industry, which is, this is someone this is an institution. They have 241,000 consumer products. At the bottom, you'll see business products, right? So they have 60,000 business products. What I've done here is I said, I want to see all consumers, everyone that has a consumer product that does not have a business product.
Okay.
And I want to see the category of spend that are business spend. That could be payroll, merchant services. So they have 32,000 customers that are using a consumer account to do business spend.
Okay.
It's enormous opportunity, right? I mean,
Yep.
think about, just if you're using just the interchange on the credit card versus a debit card. I mean, that's a big opportunity there. The servicing fees, in terms of the checking account, and a lot of this, this has happened over the last 2 to 3 years because people they're going into the bank to create an account, and they want to connect to their Shopify, their Etsy, their eBay, their PayPal, and that's what you see. They just create a consumer account, and then they start running transactions through those. And so it's a big opportunity. 13% of their retail accounts are actually businesses.
Wow. Do you see that across? So this is one particular FI. Do you see that pretty consistently across the board?
All the time. And we had one customer said, "Oh, we don't have a very big business banking at all." We did our analysis, and they had almost 35% that were business accounts.
Holy cow! So of their consumer accounts, 35% were taking on business activities, right?
That's exactly right. So people just, and a lot. And when we dug into the problem was actually inside the institution, because at the institution, the bankers would recommend a retail account because it was free.
Right.
And so they didn't. There wasn't the education of, if you're going to start a business, you should put, here's your tax ID. Let me create the right account for you. They were just opening up a personal checking account.
Yeah, and I think to the point, I think there's also natural workflows of the end customer that we're uncovering as well. So talking to other businesses that ended up in this consumer account relationship, we ask them, okay, like why? Tell me about your business account, and they'll kind of like start talking about it. Well, I was inside digital banking and I needed another account to separate my expenses or to get paid through, and so I just added an account. They don't think about I need to add a business account. They just add account and added another consumer account inside digital banking, and they just started running everything through there. So it's just interesting how this confluence of my personal account relationship versus my business, it's the same person doing both things, and they don't think about it necessarily in bank product silos, if you will.
No, I think if you're from the industry, you're like, well, why would they do that? But they're just trying to facilitate a transaction, right?
Totally. They just want to get paid.
They just want to get paid. That's exactly right. And I think there's a huge opportunity across the industry to just identify these simple things, right? And then these small businesses, as we go to the next slide, are growing. You create this knowledge about, you're going to create a personal account. Well, 1% are running actual payroll personal accounts. You're thinking about, paychecks and Intuit payroll and ADP. I mean, it's pretty staggering in terms of 2,200 accounts are running payroll through a personal account. Like it's,
Sure.
and again, this is a huge opportunity for the institution, because now you start to think, well, a lot of institutions, you can't run merchant services, the own bank's merchant services through a personal account. You have to have a business account.
Yeah, so I find that actually very interesting. And I've talked to some banks about that before. And I don't know how to quantify this statement, but there's something here. We get, rightfully so, bankers when we say, hey, let's turn on our invoicing or payment acceptance in consumer accounts. And so
Yeah.
they start to ask the questions around, okay, well, what's that mean from a BSA standpoint and compliance and underwriting? And we kind of have to go through and answer those questions. And then I'm sitting there looking at all this data and I'm like, well, why aren't you asking Square? Like, so what's the culpability of a third-party fintech that attaches themselves to the
Yeah.
point of like offering business merchant services, business lines of credit, payroll in your consumer accounts? What's the deal there? Does the bank have any culpability? Do they have the right to tell individuals you can't do that? Kick them off? Like, have you had any conversations like that with
No,
banks?
that's a good point. I mean, we do it to try to create a conversation, right?
Sure.
To create an engagement with the customer, so that the institution can educate and
Yep.
help, get them in the right products. I've never thought about it from a compliance perspective, where we're going to terminate this account if you keep running,
Yeah.
merchant services through there.
Yeah, and I'm definitely, I'm not the compliance guru. I'm kind of like, it's like, I wear the garlic and the cross just to keep compliance people away from me, kind of a thing,
You can have that
I
person on your next month. Next month
yeah,
could be the
I get
compliance
invited. I
person.
get invited to speak at a compliance conference. I'm like, I don't think that's going to go well. I don't think they're going to like me. But I love compliance people for what they do, and it's needed. But I would love it if anybody has any thoughts on that. I don't know the answer. I don't know if
Yeah.
banks are going to start to kind of get aggressive with that and lean in and kind of push back and say, you can't use that type of account with this consumer account. If you want to run Square with us, that's it's fine. But you're going to need to upgrade to a business account, and here's our service fee to do so. There's probably some likelihood you're going to run some people off. I don't know, but I think there's also the opportunity to say, like you're already, basically using a third-party provider. It's just we're not able to really monetize the transaction. I think banks are going to have to start to get a little bit better about kicking the right customers out of the ecosystem, if you will, or use that as an opportunity to say, you either have to move to our business account that does these other things, and there's no monthly fee, right?
Yeah.
Use our merchant services, our integrated invoicing. We can help you with X, Y, and Z as well. Or you need to be in this business account that supports Square and it's $10 a month. I don't know the answer, but that would be an interesting conversation.
Well, you go back to your stat of the 67% of people in that 1 to 5 million are looking to move. Are they looking to move because of the features that their account doesn't have? Fraud protection,
Absolutely.
ACH blocking, that that's an interesting thing, because if they're in a consumer account, no, right?
Yeah.
it's a different path of protection than if you're in a business account. And I think my guess is it's probably just education. Like we have these products that can do these things. You just you have to migrate to them or move your account to that type of account.
Yeah, I was actually almost doing some data from a Fed report I was looking at recently, but there is a definite need from the business owner, perceived need, and I think real need for real-time payments, both in and out. And I think businesses are struggling with that right now inside of banking and trying to figure that out, where they're wanting to get paid faster. They're wanting to make it easier for their own customers to pay. When those customers pay, they want those funds settling as quickly as possible.
Yep.
And then on the outgoing side, they want to be able to, have tighter controls around money going out, especially medium and larger sized businesses, on the timing of those payments. And so I think payment and money movement, cash flow makes sense. I think it's going to be the topic of conversation with businesses and banking. And I think that's the room to run for all of us to a degree.
Well, I think the other thing is, I mean, if you think about, what DC is doing and all the tax changes, and starting to look at the deposits from, what the kind of these side hustles. If you're running a business account through a personal, and now all of a sudden, every transaction is looking at scrutiny from a tax perspective, that could also cause some issue in terms of, how you're running and thinking about your business you should, we go back to the accounting part of this. The accounting is a big challenge when you talk about small business, especially when you have 17, 18 different ways to collect money.
Yeah, absolutely. Yeah. Yeah, the aggregation of that's a pain. That's a real problem. Okay, so now what do we have here? Retail accounts with payment processing?
Yeah, so we just talked about that, right? So they have 4,800. These are 2% of their consumer accounts are accepting payment processing. And so obviously it's competitive because they don't allow payment processing for tagged against a consumer account. So now you start to quantify what would that look like. I mean, just look at the numbers you just looked at from the guy from Deluxe. I mean, this could be millions of dollars to the institution just by helping them understand.
Yeah, and these are consumer accounts, and I'm assuming you're taking out like the common Venmo, PayPal stuff. Like these are legit business process transactions, right?
Yeah, so that's a whole different category within our system. That's
Sure.
kind of mobile payment processing and that P2P. This is literally competitive payment business. This is payment tech and Stripe, and you see all that within this
Yeah,
category.
so this could potentially even bump up if some of those other PayPal type transactions that you kind of like just kept out were actually included here.
Yeah, so I added those. I mean, those are sometimes, obviously they're a consumer account that could also be just a pure P2P. So obviously the number jumps way up. I don't want to kind of include all of that,
Totally.
but if they didn't have a business, I think I ran it if I saw business spend and so pure spend and they didn't have a business product, I did that. And I think it was like 7,800. It was like it almost doubled the number.
Gotcha. Interesting. Okay. So then competitive payment processors.
Yeah, so this is just people. So we've been looking at consumer accounts, right? So just consumer accounts that have the tendency of looking like a business or probably a business. This is that same institution that of their 60,000. You saw this earlier. This is commercial DDA of the 61,000 accounts they have. 11,000 are using a competitive payment processor. Not mobile, not Zelle or any of that. This is payment tech and those Stripe, those type of business payment processing from a card perspective.
What did this bank do with this data? So you guys ran it all. What are they doing with it?
It depends. So in some cases, because I don't want to kind of expose this particular bank, but it depends on what products they want to push. I think when you start with a strategy, it really starts from the top down. Like, what's the strategy? What products are key to us? What are we good at? What's our core competencies? It might not be business in this case. It might be more consumer oriented. It just depends. Like they might be wanting to roll out a new credit card that they've decided to launch versus outsource. So there's lots of different things that our institutions want to do. When we do that, we have a client success team that meets and works with all our institutions that they understand what their goals are, and then we map and use the data to help achieve their goals. I mean, you have to understand there's so much data. And I mean, if you think about it, especially over the last 3 years, everything's a digital payment. So if you understand those digital payments at scale, you can understand almost anything about the institution or anything about that institution's customers, being a business, being a consumer, understanding how they behave, understanding cash flow, payroll, so there's a lot you can understand, but it really has to align with the bank's goals. And so there's cases in which there might be an opportunity. I talked to one group does more underbanked, and they're like, our goal is to graduate them to a bank, right? Wow. once we get them to a place, I said, well, why don't you partner with banks, and you create your own neobank and graduate them into your own bank, right? And then start to track them further. And that's really never been their goal. Their goal has always been to take the underbanked and make them banked and graduate them to a tier 1, tier 2 or community bank.
Interesting. And then I think I've also heard you say things like your partner financial institutions are also using this data to help reshape kind of their product offering, right? Their pricing, what's included. Do you have any good stories or anecdotes on that?
Yeah, I mean, 100%. I think you really, I think the opportunity is always there if you just listen to the data, right? This is the biggest thing, is that before, you had plenty of market analysis because you could talk to your customers.
Sure.
Now you can't, because they're on this, right? They're
Yeah.
I got lots of text messages. They're on that, and you don't have that personal engagement, that personal interaction. What you
Sure.
have, especially, like, I'll give you an example of Chase. Chase is, at least in my area, has converted a lot of their branches to be private banking or wealth type
Yeah.
institutions. Well, if you're a small business owner and you create a personal account and you go into the bank and all you see is wealth, and you don't qualify for that, who do you talk to? You go to the teller,
Yeah.
right? And so that, I think there's this evolving, bank ecosystem in terms of who are the niche players. You have Square that's really focused on the small business and now going up market. Like, each institution, what's great about our customers is that anybody that owns the DDA has an enormous amount of data, money moving, where is it going, if they don't have the DDA, let's say they have a mortgage, where's it coming from?
Yep.
And so they can really start to think about, if I'm seeing a lot of consumers with, this one particular institution is the mortgage holder, right?
Yep.
Then why am I losing? Like, do some research, understand the pricing. If 3 or 4% of the loans over the last 30 days came from one institution that's a local institution, why? Like, do some research,
Yeah.
do some analysis. In some cases, it's pretty easy to make a small adjustment for you to start winning those customers back, or winning at least new mortgages. And so, again, we're basically the tea leaves. We're trying to help understand and identify what the shift is and what the change is. And so you can do more analysis, and then our team can also help augment that with our client success group.
Absolutely. Cool. Okay.
This is my last slide. This is a plug for you, Derek.
Boom, boom, boom.
This is basically, I just said, hey, anybody that's taking payments from either Square or Intuit, what percentage of that across any account, most of these are obviously business accounts, but it's like 12% of their business customers are taking money just from these two providers. That's, we have, probably another, you've seen the list, probably 60, 70 of these different providers that do these types of services. But 12% just with these two providers. So there's a big opportunity in terms of trying to, trying to integrate something like Autobooks within an institution to help them drive payment.
Dude, amazing. Okay, so we're gonna flip over now. Some of the data that we analyzed. Would love your thoughts and opinions and like corroboration around what you guys are seeing. So recently, through one of our partner relationships, we were actually able to get to quite a bit of large amount of data. So I've just had kind of 3 sample banks pulled up here, and then we'll kind of like just kind of talk through these, if you will. Sorry, I need to like move some stuff out of my way here for Zoom. So this is obviously 2021. In the case of this $13 billion bank, we were able to get access to just like 7 months of data. Month 10, which is October at the time, we ran this about halfway through the month. So this is really just like half of a month here. And then we started to get like a full month here. Intuit is a weird, I don't know if you guys see this too, Rob, but like Intuit's, their transaction descriptions change. It seems like it fluctuate quite a bit. I don't know if they're doing that purposely, but they're the hardest one to actually grab, and keep consistent, which is kind of odd. But let's just, the main focus is here. So these are all, kind of transactions I want to look at, just kind of like focus the conversation on a bit. Because remember, Intuit owns QuickBooks. The way those things come through is a bit difficult. So PayPal at this bank, in about basically 6.5 months, $57 million in total deposits at this organization. Square, $110 million in total deposits. So that's where you start to get that amount of activity that Sean talked about earlier. Like, man, that's a meaningful amount of activity that's taking place here inside of
So these are just deposits too, right?
Just incoming deposits, because to us that signals like they're getting paid through that service provider, right?
Yeah, I mean, it'd be interesting. So what we see, not just that, so we see the other side of Square too. So anybody who is paying a local merchant, right, and And so that's a great opportunity for institutions too, because as they start to see their own customer base pay other merchants all through the Square network, which is pretty easy to identify when it's running through the rails, it creates an opportunity to try to win them back, and then also get both sides of the interchange, right? Get the depository, so that, I think there's lots of opportunity when you start to dig in this data. Definitely.
Amazing. And then, I mean, just kind of over that time, these providers sold like $260 million of incoming deposits. It's a tremendous amount of activity taking place from these third-party providers. Okay, so now let's kind of move it down market a bit to a $1.75 billion bank, 10 months worth of data. Once again, I just kind of want to focus on PayPal and Square here just for the time being. $5.2 million of incoming transactions from PayPal, $31 million of incoming Square activity.
What's amazing is, everybody thinks PayPal's the behemoth, but look at what Square is doing.
Square, yeah, I mean, they are killing it. They're crushing it. They are crushing it. They are the 800-pound gorilla, make no mistake. These other ones, like, they're a threat. This group right here is scary. Scary. Like, they do a really good job, like, I talk a lot of trash on them. Actually met at Money 2020, the former head of product at Square, and he's now somewhere else. Rob, it was kind of funny. We just got introduced, and obviously I'm geeking out and talking to this guy. And he's like, oh, let's connect on LinkedIn, because he's kind of getting into this crypto IRA stuff, which is fascinating to me. And he's like, I'd love to hear your thoughts on that, moving forward. And so we were talking, and I'm like, hey, just know on LinkedIn, I'm just going to be trashing Square. So, like, full disclosure, I'm pro bank guy here. So I was like, I love what you guys have built, and I think you've done a good job for the businesses, because they needed it, but we gotta take that step back. So, no offense here. But man, not only from
this is only a $1.75 billion bank.
That's right. Look at that activity, man. That's crazy.
32 million. Yeah. And this doesn't even count the other side of their business, which is the processing side. And it doesn't count all their crypto stuff they're doing too. I mean, they're just a massive organization.
No, I think when you start to when you start to combine Cash App and Square Business and the overlap of those, and make no mistake, everybody, like, they're building an ecosystem, a connected ecosystem where they can do real-time settlement for all of that,
100%.
And they're starting to, I believe I saw, if you work at a Square, let's say you work at a coffee shop and they employ 10 to 12 people, those 10 to 12 people can now download Cash App and get real-time payroll deposits.
We see Square payroll deposits all the time.
Yeah. Well, I think we're going to start to not see those, quite frankly, because what's going to happen is they'll be on
their own network.
They're going to be in their own network, right? Yeah. So, more and more Square is moving, their business customers to say, just bank with us, keep deposits with us. You can not only pay your people in real time, you get access to lending, and then those people that get that, it goes right into the Cash App ecosystem. And Cash App has a really nice debit card service and crypto acquisition and stock and everything else. Like, it's going to get pretty square like that. That's the threat right there. And then lastly, just a $600 million bank, PayPal and Square, once again, PayPal's pretty consistent, in all these, which is pretty good. And then Square, $9 million in just 7 months, nearly 6.5 months of activity as well. So it's not just, the reason I wanted to kind of bring these 3 samples, it's not just big banks, like, this happens everywhere. It happens in smaller communities, rural communities, medium-sized, larger metro areas, obviously. But that's what we see. We see it happening everywhere. Do you guys see the same? I mean, you guys work with a variety of banks as well, right, Rob?
Yeah, we see, like I said, this is exactly what we're seeing also. I mean, I think it's a great opportunity. I mean, when you ran this, was it just business accounts?
It is. These are all business accounts.
Think about what we just talked about. I mean, I bet you this number doubles or triples, right? I mean, that's I think I think they're a behemoth. I think the small institutions have to understand that, and the Square makes it easy, but I think their price is expensive. I mean, when you think about small business, they're them and Stripe, they're both expensive from a processing perspective, especially when you talk about just pure debit card processing, way more expensive. And so a lot of it is just because again, this goes back to what's happened over the last 3 years is a lot of it just pure education about products in this space is that they're easy, already integrated. Shopify is run by, their payment processor is basically Stripe.
Yeah.
And they charge on top of that if you want to use your own. And you're right. I think they're trying to create their own ecosystem, their own payment network. I mean, it's and be able to do settlement, everything. And it's we can the small banks can win here. I mean, they have way more data, both on consumer and business, especially for the DDA account. And I haven't seen, I would be really concerned when Square starts to, if they really start to become a full service kind of business bank, that's when I'd be concerned.
Yeah. Well, I mean, they are now. They got their banking charter, and so that's the thing.
They got to
what
roll
you're
the rest of
saying,
the
though, is
products
like,
out, though, right? They got
yeah,
to roll the rest of the products out.
they do. I think what's interesting for me is, and I should have brought this up earlier. So this is Venmo in business, 1.3 and 2.9. Even for the financial institutions, you win these
Yeah.
two things, right? There's no reason. Like, these are just very basic when it comes to the service offering there. Those are just basic money movement capabilities inside, most of these,
Simple, yeah.
from a business standpoint, right? They don't necessarily have the complex nature that Stripe has when it comes to invoicing, a merchant portal, managing your people, inventory management,
Yeah.
some of those kinds of things. But these amounts are getting meaningful. This signals, there's just basically people that need basic, hey, I just need to get paid. Very simply, help me accept payments for our customers. Let's actually go back and look at, I mean, like, even in this, $1.75 billion bank, you start to get into $7-8 million in 7 months that you're acquiring. Like, that's a really great start. That's a really good down payment on competing, plus whatever else you have with your merchant provider. Oh my gosh, yeah, look at this. Venmo at this organization
That's
equals
meaningful.
PayPal. Yeah, that's meaningful. So as you said, look at this 1 month, $10 million of Venmo activity in business accounts at this organization. So this is where it's going. Make it simple for people to accept payments. That's what this is clearly signaling. This is what they need. Wow.
I mean, is that the end of cash, right? I mean, if you're starting to see these kind of volumes.
I mean, we've done stuff in the past, and 2020 just accelerated that whole movement, moving away from, the phrase I give is like, businesses are transitioning from accepting cash and check in person to in-app or online payments, and that's just taken off. It is what it is. And the problem, here's the core ecosystem problem for banks. Before that, if I accepted cash or check, basically there was only one place to get access to that working capital, my local financial institution. I had to go deposit it there. So that created this kind of PFI, or primary financial institution relationship, between the businesses and the financial institution, because you were the first line of deposit. Whenever that changes, when that shifts to digital, whoever facilitates the payment is now what I would say is the PFI, right? Because they have first crack at the relationship. They have first crack at the deposit. They've got the ability to signal on data and to do, product recommendations. It's the way if you control how a business gets paid, it's like locking in direct deposit to consumer relationship.
That's right.
And so that's where everything kind of flows out of. Okay, so this is kind of just total accounts that we also analyze. Just notice on some of these banks, we didn't even have the full amount of 7 or 10 months. And some of these banks, we only had like 3 months of data or 2 months of data. But these are just the total number of accounts at each of these organizations using these third-party providers as well. So you can see, it's a meaningful share of the total account volume at these organizations are attaching themselves. In many cases, you see a combination of like using, maybe PayPal plus traditional merchant services inside of that organization, because they're needing that digital side as well.
Yeah, okay, so and that's just business banking.
Just business banking, not even consumer. Yeah. I mean, we don't have the same kind of library stuff you guys have, and we do a pretty good job about it. That's why I wanted you to kind of speak into that. But for us, it's a bit harder to do the full signaling. So I just wanted to stay raw in the business just to show the volume. Okay, so making progress. So here's a couple of interesting things that we've got coming online to help with this. And I want Rob to kind of talk about what they do. So this is a bit raw. So this is in development for us. I kind of chopped off up here. Normally you'd have like your bank name and your logo. your branches would be here, your customer names would be here. So here's what we're doing. We're building a back office portal for you all to see basically all of this activity that we saw coming through. So now just imagine the accounts and the transactions that are coming through. We're building a tool for you all to basically see this activity come through in a dashboard. So you can see this, they just opened up a new account and they attached Square, PayPal. You want to email, call, or refer them to one of your frontline staff to take action on that. We just saw a Signal transaction. Signal transaction means that they just attached like a low micro deposit transaction. Do you want to email, call, or refer them? So we're actually trying to create this proactive way for you all at the financial institution to see this thing taking place in real time and take action on it. By your branch, these are going to be your leads, your adopted, your activated, numbers. So like I actually start to help you all kind of see, hey, here's the opportunity. You click on that, you see all those customers. This is the list. And then what do you want to do? How are you going to take action on each of those customers? Next thing, that we've got going on. So this is kind of like that performance dashboard from a campaign perspective. So as we're starting to build out, your bank name goes up here. You got kind of your total activity going on. You're going to see kind of like who's working with you all at Autobooks, kind of your FDIC reported assets, who your digital tech stack is. But then these campaigns that we're offering, you can kind of go in and view the details and see what's going on with those campaigns. So maybe you pushed out an email campaign and you want to measure the results of that. Remember, our stuff is all going to be geared towards just what we do. And so that's why I wanted to bring in Rob and team, because when they do the analyzation, they do their marketing services, it's much more broad, so like we've got this really kind of like laser focused, fine-tuned thing. We're going to look at this activity. We're going to give you a prescriptive program to like go at, these customers and send the right message at the right time, which basically, actually it's here. Should have put this in a better way. So we have this Signal transaction workflow guide that kind of documents how you can send the right message to the right time to your customers. Here's an example of basically, we see one of those activities coming through, and then we're going to self-segment those customers and give them an email. That email is going to say, hey, invoicing or payment form. These are kind of like the different variants and things that we would send out. And then you're going to get this report of like, what's the performance look like? Like, this is the email. That's the subject line that we sent out. This is the offer within that. These are the open rates that we're seeing on our emails, click-through rates, unsubscribe rates. But it's really this prescriptive, triggered way to say, at the time of a data signal, a data conversation. So earlier, Rob talked about like, we're not talking to people anymore. And I'm sitting there thinking, yeah, but your data is talking. So when the data gives you the right conversation, how do you digitally initiate that conversation in the right way with the customer? This is what this program is all about.
Well,
so
you're
yeah,
right,
Rob,
100%. The data talking is
data is talking.
And it's screaming. A lot of times it's screaming, right? Like and by the way, the consumer expectation and the business expectation is very high in terms of you should know my data at this point, right? And you should, that's happened because of just pure technology companies that have mastered personalization. So that there's a very high level of the bar has been set very high, and institutions have to kind of come up to that bar just to serve their customers.
Absolutely. We also have, and you all are going to get this in the presentation, this guide to ROI, where we break down and show you like, what's it worth, to go activate a business customer getting paid through Autobooks as an example. And so we just kind of show like a sample number of customers. We calculate, basically how much you can get, and kind of show you, hey, after year one, if you go activate a certain number of customers, you can start to earn $2,000 a month in non-interest fee income just by activating a segment of that population. And like, our estimates are conservative. I mean, we showed you some huge numbers. This is the opportunity, though. You go start to win some of those customers away from PayPal, away from Venmo, maybe even away from Square, get them into your portfolio just on the interchange revenue. There's real opportunity to go earn income off of those. So Rob, from segments perspective and your product line that we discussed earlier, your targeted marketing, how are you helping banks take that data conversation and kind of go generate the similar type of income, whether it be true non-interest income or new product adoption, deposit growth, et cetera, et cetera.
I mean, I think the thing that's great about our platform is that we talked a little about, our client success team and aligning that with the goals of the institution. But once we understand what the institution wants to do and we can build in the messaging, we're already pre-integrated to lots of channels. We actually have a full integration to real-time bidding network, so we can actually place media right out over the internet one-to-one.
Oh, wow.
Yeah, which is really awesome, especially when you think about, I mean, if they're logged into online banking and you want to place a message, then now you're seeing it in multiple channels, email, online, that message gets out there, and it doesn't cost you a fortune in terms of kind of just brand awareness.
Yep.
But the tracking of that, we see all the transactions, it's closed loop, so we see transactions at least daily. And we measure to the goal. So if the goal is to open up a new mortgage, or the goal is to draw against your home equity line, we actually show them the return. And if you look at all of our customers across every campaign that we're running, our average return on investment is 15 times.
Yep.
All campaigns, all aggregated. And so I think that's the important aspect, is that, one, you have to show to the CFO these days in banking that every initiative makes sense for you to spend time and or money from the institution, especially most of our institutions are publicly traded.
Yep.
But that's an important, it's an important aspect, that you really want to drive value, and you want to drive value that makes sense to the institution, and you want to measure it to make sure that it makes sense. And so that's the critical part, and it's all driven through data. Right message, right, you talked about it, Derek, right message, right time, right place.
Yeah.
But a lot also has to do with education and what products you have, because a lot of them don't understand some of the products that you have. And like we just said, a lot of businesses are using consumer DDAs. It's that's an easy use case to win customers back over to the business side of banking.
And I think the key there is, we kind of say, like, don't spam your customers with unwanted information. Right now you may go build like this marketing program that's going to run for the year, and you've got your CD rate, and it's just quarterly program. We want to be very targeted. Not saying you shouldn't do those things, but send a contextual message to somebody that meets them at the right place, the right time. It's the replacement of them walking in the branch, and asking you a question. Let their data ask you a question of you, and then let you supply them the answer. That's the modern, convenient model of banking, I believe. And so if you're interested, so I know we're kind of long on time here, or right at it. If you're interested, if you have questions, if you want to do, learn more about Segment, if you're an Autobooks client, you want to learn more about those signal transaction workflows, ROI guides, and the thing that we're working on there. If you want to be kind of on the early adopting side of that, let us know. Let's talk at autobooks.co. We can get you in conversation with Rob. Rob, what's your email?
I dropped it into the chat to everybody.
Okay.
If anybody wants to send me a message and continue the conversation, they can email me at rob@segment.com.
Cool. All right. Thanks everybody for attending. You'll get the recording. You'll get this guide. And thanks, Rob, for helping me out, man.
Yeah. Thanks, Derek. Talk to you soon.
See you guys.